The global economy started its recovery after the COVID-19 shock. The so-called corona crisis caused a severe shock to the global economy, especially in the second quarter of this year. When we look at the growth figures for the second quarter, we see that all major economies in the world have been hit. Obviously, there are major differences between countries, which can be explained by the severity of the virus outbreak, but also by the length of the lockdown measures that have been announced and implemented by governments. Now, at this moment, we see that these lockdown measures have been lifted even slightly earlier than expected, and the recovery started at the end of the second quarter. And we expect this recovery to continue in the third and fourth quarter and also well into 2021. Obviously, this scenario is subject to risks, and the major risk is obviously that we'll get a major new virus outbreak, which could lead to another lockdown period or even partial smaller lockdown periods. And both of them would actually cause additional economic damage. But let's assume that this is not going to happen. And if this is not going to happen, then we expect that the recovery path will be gradual, will be slow, but will be quite substantial. And that's, of course, also stimulated by government measures, policy initiatives. For example, if we look at what central banks are doing, they are keeping interest rates extremely low, and we expect these low interest rates to continue for the next few years. And moreover, they are using all kinds of unconventional monetary policy instruments to stimulate the economy and to keep, for example, long-term interest rates low. If we look back at the recent period, actually, we see that long-term interest rates went down slightly further, which could be explained by safe harbor effects, where basically investors are looking for safe havens. They're looking for safe places in an environment which is still turbulent, where the increasing numbers of COVID-19 cases in some countries might still trigger some nervous reactions in the market. But on the other hand, they're also a signal that the economy is recovering. In particular for Europe, we also see in financial markets that the spread, the interest differential between European interest rates and the German interest rates went down again, went down further. And that's good news because it signals that financial markets trust that European institutions have a good plan to deal with the aftermath of the corona crisis. In particular, the next generation EU plan is considered as a very promising signal that there is more financial solidarity in Europe. Obviously, the north of Europe and the south of Europe had major discussions on this plan, but ultimately what's on the table could be a promising signal that in the future Europe will give a major fiscal stimulus to the recovery in Europe. By the way, it's not only the European initiative that counts, but also the initiatives in the different European capitals, because we see that different European governments are all giving additional fiscal stimulus. The champion is definitely Germany, where we see that a package of 500 billion euros has been approved by the government and also approved by the European Commission in the meantime, which will give a major stimulus to the largest European economy, but obviously it will also be beneficial to all other European economies. So therefore, if we look at it all together, we see that in an environment with strong monetary and fiscal stimulus, the economic recovery is likely to be very strong and quite persistent. Now, something very strange is going to happen in the figures in the next few months, because while we see that GDP figures will improve from now on, we still expect unemployment figures to go up. We still expect bankruptcies figures to go up. And that is obviously, let's say, the long shadow of the corona crisis. Although the economy itself is recovering, we still see that some of the effects of this crisis have been postponed. The temporary measures to shelter unemployment, to shelter companies from bankruptcy, will be lifted. And once these are lifted, obviously we'll see the negative consequences. So therefore, we still have a long way to go in this recovery path after the corona crisis. But at least what we see at this moment is hopeful and leads, let's say, to a cautious, optimistic feeling that we share.